Hi, everyone. I'm Carol Masser of Bloomberg Business Week Radio and TV, and I'm delighted to bring in Cathie Wood. She's the founder, CEO, and Chief Investment Officer of ARK Investment LLC. She is someone who is well known to our audience. Her consistent performance since she started ARK about 7 years ago has certainly given her a lot of notoriety. Cathie, first of all, thank you for joining us. I know it's a crazy day. We're all watching the markets. We're all watching Bitcoin in a big way. The crypto market is coming undone. Last trade was about 35,000 on Bitcoin. What's happening right now, and how low do you think it can go?
Well, I think we're in a risk-off period, and for all assets, if you look at the stock market, the more risky or volatile parts of the market have come in dramatically since mid-February, and I think a lot of the concerns have been around inflation. Initially, that was helping Bitcoin because obviously Bitcoin's a very important inflation hedge. You know, it's a rules-based monetary policy, the first global rules-based monetary policy we have ever had. Hugely important reserve currency of the crypto asset ecosystem. But I think what's happening right now is because the stock market, the highly volatile part of the stock market, the innovation-oriented part of the stock market has gone through such a correction, which has been flamed by inflation fears. I think the correlations among volatile assets are going to one right now, and that's including Bitcoin.
Well, I want to unpack a couple of things. So Bitcoin, I mean, you at one point, I think back in April, told Dow Jones that it could go to about $500,000. Do you still hold that target? Do you still think that's where we're headed?
We do. I do. Yassine El-Mandra is our crypto analyst, and we go through soul-searching times like this and scrape the models. And yes, our conviction is as high. The one thing that has changed here, however, is the environmental concerns around Bitcoin in particular have caused people like Elon Musk to pull away and say, whoa, 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 let me make sure I understand this. And we believe that even this is going to change because, first of all, right now, the percentage of Bitcoin mined with renewables and hydroelectric power is quite substantial. I think in China, it's over 50% in renewables. And we also believe, and we wrote a paper in conjunction with Square on this, and we're going to have a conference about it in July. We believe that Bitcoin mining integrated into the distributed grid, and by that I mean solar roofs, power walls in homes, utilities, merchant power producers, starting to include Bitcoin mining in the ecosystem. Why would they do that? They would do it because renewables are intermittent power sources, right? Weather, is it sunny or not? Wind, is it windy or not? And Bitcoin mining could take off if there's excess energy from solar being loaded into power walls, it can be offloaded into Bitcoin mining, and the whole ecosystem, therefore, becomes much more economic. If this happens, we believe that the adoption of solar is going to accelerate dramatically because there's another profit center associated with it, Bitcoin mining.
Well, what happens, though, in the meantime? So here we are at 35,000, Cathie. Do you think we go much lower from here?
You never know how low is low when a market gets very emotional. A lot of traders see Bitcoin dropping below the 200-day moving average, which was at 40,000. So traders, once that happened, they just dump. Some just dump and run. I think we're in a capitulation phase. Yassine has a dashboard. We were looking at all the indicators this morning. They are all suggesting that we are in the capitulation phase, which is a really great time to buy, no matter what the asset is. A capitulation phase is buy. It's on sale. Now, am I saying 35,000 is the low? You know, if traders, and there are a lot of speculators in Bitcoin, if they are running for the hills just because Bitcoin has broken through a moving average that is important to them, it could continue. But all of our indicators are saying this is capitulation right now.
Do you have a low point on your model for Bitcoin?
No, these metrics are more a measure. Are we in a truly capitulation phase?
Okay.
And it's very detailed. Yassine uses on-chain analysis, which this is the only asset where you can see exactly who's doing what, when, why, and how. And all of those metrics are saying, this is a capitulation. This is as bad as it got during the coronavirus crisis.
So what about systemic concerns? And I'm not talking about bringing down the financial system, but more and more of kind of the establishment are getting involved in Bitcoin. A lot more companies have Bitcoin on their balance sheet. Should we be concerned about their exposure? Tesla, for one, but others.
Yes. Well, they're usually, in the case of Square and Tesla, they're between 5 and 8% of their cash is in Bitcoin. So that's no cause for concern. I mean, think about it. We were worried that Tesla would run out of cash. Of course, ARK was not worried, but the world was worried 2 years ago that it would run out of cash. It has so much cash now that it has the luxury to put 5 to 8% in Bitcoin. So MicroStrategy is another company. It has almost all its cash in Bitcoin. That's perhaps something different, But as I said, if we are in the capitulation phase, we shouldn't be worried about MicroStrategy either. We do believe this is a new asset class and that institutions, they are looking at it right now because the correlations of relative returns and total returns compared to other asset classes tends to be very low over time. And so they have to look at it. Now, ESG might prevent a move in wholesale, but we do believe that once they understand how renewables are becoming incorporated into the Bitcoin mining ecosystem, and that Bitcoin mining might accelerate the adoption of solar, and I think Elon will come back and be a part of that ecosystem as well.
So why do you think he came out and said, wait a minute, maybe I'm going to back off of Bitcoin? What do you think his concern was? What was his nervousness?
Well, I think he moved in because he's been watching, like we all have, basically unhinged monetary policies. They're not tied to anything anymore. Whereas Bitcoin is mathematically metered to top out at 21 million units, and we're approaching 19 million now. So the scarcity factor should increase and support the price. We do believe that is what is going to be supporting the price in here. I believe what happened after he took the position in Bitcoin is he got pushback from institutional shareholders like BlackRock. If you've got Larry Fink, beating the drum on climate change as one of the most important topics and problems of our time, then he was going to have to face those sorts of concerns. I don't think he expected that. And now that he's sorting it out, learning more about the environmental impact, I think he'll come back into the mix. We certainly hope he will. I don't know if he's going to be part of the conference in July or not. He would be a very good addition because I think he would provide both sides of the equation. How quickly could the adoption of solar accelerate if we introduce mining into that ecosystem?
Do you expect a Bitcoin ETF to get approved anytime soon? And I'm curious if you plan to launch a crypto ETF anytime soon.
I think now that Gary Gensler is head of the SEC, he's Bitcoin friendly. We know that. He taught courses at MIT before coming back to the SEC. So, and I think the research professionals at the SEC, they understand Bitcoin in particular, and I think are much more comfortable with it now that we've had several years to digest what exactly it is, go through a bear market, go through a bull market, now go through a bit of a bear market. I think watching the ecosystem evolve and actually become even more anti-fragile. We're getting some real tests here, and if the system doesn't break break, and I don't think it will. I think that their comfort will increase in a couple of ways. Number one, the infrastructure is there, is robust. Number two, the liquidity is there. I don't think that's going to be disproven here. And number three, the price is down from very lofty levels. So, hey, why not start an ETF after a correction in the market than before? So I actually think the odds are going up now that we've had this correction.